All right, today is Friday, October 23rd, 2020. This is the end of day review. It's really been a really strong week this week for the AES, the Adaptive Entry System signals. So I'm covering both yesterday and today's performance. 9:30 to noon, trading all signals, and 7 a.m. to 4 p.m. trading the trend and trend bias signals. I like to pay attention to the 7 to 4 all signals also, just to kind of see how it performs. We don't code that performance onto a personal trading plan. The reason we enter the data on the other two categories into the personal trading plan is just so you have an idea of how the personal trading plan works and how effective it is for telling you when enough is enough during the day, when you should walk away, and what your potential income is or can be over the course of 12 months. So in the 9:30 to noon category, yesterday we were down 10 points. Now we're trading the NASDAQ 100 futures. We're using a 5-minute chart. Each point has a $20 value. So yesterday we were down 10 points. Today we're up 10 points. So the last 2 days were kind of a wash there. But you can see the first 3 days of the week. And as you know by now, I'm more interested in the overall averages than I am individual days. In our 7 to 4 category, trend bias and trend continuation trades, yesterday was 72.75 points at $20 a point, and today was 14.25 points, again at $20 a point. So I'm going to go ahead and shift over to our personal trading plan, and we are in the 9:30 to noon category, where we take all signals on the adaptive entry system. That's trend bias signals, trend continuation, consensus signals, as well as momentum signals. All right, so yesterday was -10, and that -10 times 20 is an easy number to figure out. So -10 times 20, and we're trading 3 contracts. So that's a -$600 for yesterday. And it's thinking. Hold on just a second. So it's -$600 for yesterday, and it's going to be plus $600 today. And so we're going to put in plus 600 for today because it's, again, 10 points times $20 a point times 3 contracts. Yesterday we traded 8 trades. We did 8 trades times 3 contracts per trade, so it's 24 contracts. And today we did 12 trades at 3 contracts per trade, so it's 36 contracts. Okay, so I'm going to put the data in the other category also, and then we'll talk about projected performance and 12-month forecast. Okay, so yesterday was 72.75 points times $20 a point times 3 contracts was a nice 43.65 for the day. And we did 15 trades, 3 contracts per trade, so it's 45 contracts. Today, kind of a light day, 14.25 points, $20 a point, 3 contracts is positive $855. We did 16 trades at 3 contracts each, so it's 48 contracts. Okay, so now that's the hard work. You notice that whole process for 2 days took about 2 minutes on 2 different categories. But now the real work begins in terms of you managing your business effectively and viewing what your financial forecast is. I'm going to start with the 9:30 to noon category and see what that projection is. So this data up here is helping us understand what our actual run rate is. We are now done with 16 weeks of a 52-week forecast. 27 days within that 16 weeks have been losing days. And so we look at that as a ratio of losing days to weeks. And then we take a look at what the average winning day is and the average losing day. Now these numbers, I want to say this very clearly because it confuses some folks and we get questions about it. These numbers are not just the pure average of the winning days or the losing days. These numbers are the average of the winning days and losing days, but also factoring in the ratio of losing days to the amount of time behind us. So the rate of losing days to weeks is the frequency rate is factored into the averages. And by doing that, as opposed to hard coding increase in the number of losing days per week to maybe 1.5 or 2 or 3 or whatever you think is valid, the minute we hard code it beyond what we started with as 1 day per week, then we're kind of stuck at that number. By factoring in the frequency rate into the average winning day performance and the average losing day performance, we are able to then let that be a variable that will continue to modify at its own rate as we move forward through the rest of our 52 weeks. So what's most important now that we have an established run rate, we know that we're averaging 22.96 on our positive days and 36.56 on our losing days, is to translate that information into our forecast. The remaining balance of the 52-week period, which would now be 36 weeks, remaining 36 weeks are going to be based on what we enter in these two fields right here. So I want these two fields to be as close to my actual run rate as possible. So I'm going to put in minus 36.56. And so now what I'm saying is I've got 16 weeks under my belt. This is what I've averaged. This is the number of losing days that I've averaged in 16 weeks, that I've experienced in 16 weeks. Those losing days, that frequency rate is already factored into the averages. So now I'm going to take those averages and I'm going to input them here so that I can use those same run rate averages to forecast what the next 36 weeks could possibly look like. And then the overall result of the 16 weeks that we've already traded, plus the 36 weeks that we have out in front of us, if we continue at this current run rate, our full 12-month income is approximately $164,000. That's the potential right there. It's not going to be exactly $164,257 because each day these run rate numbers are going to change a little bit. These forecast numbers are going to change a little bit. The further out in the 52-week plan you get, the less these numbers are going to change, but they are still going to change, by a few pennies one way or the other. Your number of losing days may increase. The frequency of losing days may increase slightly. And so that's going to factor into these numbers. So I'm certainly not in any way guaranteeing that this is the number that you're going to have as your income for 12 months. But what you're doing here is like any small business owner would do. You are determining what a reasonable income expectation is based on current year-to-date performance. Your year-to-date performance started the beginning of July, 16 weeks ago, and if we assume that we could continue to operate at a reasonably close performance to what we've already achieved, then it's reasonable to expect that we could have somewhere around $164,000 of income. That is assuming that we're not going to increase or decrease the number of contracts that we're trading now. We've scaled up to 3 contracts, and I have this personal trading plan coded at a maximum of 3 contracts. We started with $5,000 in this account. We are trading contracts that have a margin value no greater than 10% of the balance of the account. So I think that's a pretty conservative estimate. I'm going to hard code the number of contracts that we've traded each day now by putting in a contract override equal to the number of contracts we traded. And the reason I do that is because if I decided that I wanted to increase the number of contracts, increase the maximum number of contracts that I could scale up to, it will not affect anything in the prior 16 weeks. So for example, if I wanted to increase to 10 contracts going forward, it's going to scale me to 8, then back to 7 because we might have a losing day, then 9. Eventually, I'll scale up to 10, but it doesn't affect any of the prior contract values. So it gives me a realistic idea of if I scale greater from here forward, what that could do to my potential income. So if I know that I'm not going to scale up to 10 until there's enough money in the account so that the margin requirement for 10 contracts is less than 10% of the balance of the account, then I might be comfortable doing that. And that would certainly dramatically change the potential income for your trading. I'm going to leave it at 3. I think that that's a very reasonable number. This is assuming you're trading from 9 to 12 with these averages, maximum contracts of 3. Now, in the other category where we track 7 to 4, we're also using a maximum of 3 contracts, so we're going to leave that there. Again, it's a variable that you can change. We have 17 losing days out of 16 weeks, so we're almost 1 day a week, slightly ahead of that. Again, that frequency rate is factored into the average win rate and the average loss rate on a per day basis. So I'm going to put my forecast numbers in. Forecast has actually increased. Now look at this. When we put this in on Wednesday, the positive day forecast was 3368. Now the positive day forecast is 3589 because that's our actual run rate. So there's a variance there that's helping us. Our negative day run rate was 2296. Was 2417. Now it's 2296. So we had such great performance this week. It helped both of those variables. Now watch what happens when we input those changes. As of Wednesday, when we entered data into our personal trading plan, the forecasted income was 346,183. So let's go ahead and put in our positive day variable of 3589 and our negative day variable of 22.96. And there you go. Now it's 367,891. So there was a significant change just simply because we had really great performance this week. And a logical question would be, how can I continue to have that level of performance every week? You can't. There will be weeks that are going to be outperforming your average, and there are going to be weeks that are going to be underperforming your average. And the important part here for you managing your personal trading business is to make sure that whatever you enter here in the forecast variables matches almost identically, or at least very closely to what is showing here in your actual run rate historical values. So that's a very important part of this process so that you can understand what your income forecast is. And then if you want to adjust your contracts, I'm going to hard code the 3 contracts in each of the days that we have behind us now, 16 weeks. So if I wanted to increase this to 10 contracts, that'd be a pretty healthy jump from 3 to 10, but you can see that that's a significant difference in your potential income. You've obviously got more per dollar per trade risk on 10 contracts than 3 contracts, but you have to decide what you're comfortable with. This is a variable that is entirely up to each personal business owner of their trading business. I think 3 is a very reasonable maximum. Almost $368,000, having started with $5,000, and again limiting our margin risk to no more than 10% of the balance of the account. And then here we've put in a cap, a maximum of 3 contracts. You can make that whatever you want. So pretty happy with what we see in terms of performance in both categories. One is extending your trading time from 7 to 4. The other one is 9:30 to noon. 9:30 to noon is taking all the adaptive entry system signals. This one is taking only the trend and trend bias and trend continuation signals. Any way you slice it, it's really, I think, outstanding potential growth having started with a $5,000 account. All right, I'm going to jump back to the tracking here. I know that several of you like to capture what the tracking detail looks like. So here is today, 7 a.m. First trade was after was 7:09, and then to 3 o'clock, last trade today, and then yesterday. Here we go. First trade after 7 was 7:35, and last trade of the day was 3:30. So there's the detail. We take a look at the averages. Pretty strong averages, continue to be strong. The 7 to 4 trend bias and continuation for 94 days is averaging $648.88 per contract, 12 losing days, 12 negative days in that time frame. The 9:30 to noon, taking all signals for 94 days, is averaging about $353 per contract, 24 losing days. The optimum category, the one that tends to perform better than all of the other combinations, is trading from 7 to 4 all signals. That's averaging that $1,281 a day, 10 losing days out of a 94 day tracking period. And then, of course, we've got the variable down here, which I know Erin's really good about providing to each of you who ask in the room. We talked about this quite a bit in the Q&A, but she built this feature in here where we can select any combination of signals that you might be wanting to trade and any combination of start time and end time, and we can provide for you what that looks like. Right now, we're letting it show what would all signals plus fractals be from 7 to 4 if you decided to trade that long. And it's $1,600 a day per contract, $1,600 per contract, 9 losing days in that time period. Now, what Erin and I were chatting about here just before I started doing the review is we had some discussion today and we decided to put in another summary, which is kind of a nice, easy way to see, well, how is each calendar month doing? We've got these great averages that look back over right now 94 days, but you might want to have an idea of how the overall strategy is performing on a month-to-month basis. And so these numbers need to be tweaked, they need to be scrubbed, but Erin put this together and we'll continue to work on this so that we have really good data in here. But we're starting to build this so that we can see at the end of every month what our full month performance would be. So if you just take a look at the number of points being produced, June, July, August, September, October, which we only go back that far because that's about when we started building this tracking tool. You can see the number of points being produced on a monthly basis. Now, what's interesting about that to me is it helps me see that in this particular category, we had 2 very, very strong months, and then we've had good profit production, but definitely not as strong as the first 2 months. Months all by themselves are going to give you averages, and we hope to be able to provide, this number is not valid yet, we hope to be able to provide an idea of what you could expect on a monthly basis. The other numbers I just showed you in the averages category are helping you understand what you could produce on an average day, but I think people like to see a bigger time frame. You know, what can I produce over the course of a month? So in the trend bias categories, you know, we've been a little more consistent. Actually, September was a little weak compared to the other months, but a little more consistent than in the 9:30 to noon all signals. And then what has been the optimum category, you can see here that these are the total point production values for 4 full months. And then, of course, we've got another week before we have October behind us, but you can see what they've produced. What I am very interested in is how June and July both produced some pretty solid performance. August and September and October have produced outstanding performance, but certainly not as strong as June and July. That would start to help us recognize a pattern of you know, higher months, lower months, kind of like you're looking at a stock or a futures chart where you see highs and lows. And if we are able to, and Erin will figure it out, but provide an average, you can see what an average monthly basis might create for you. So I'm kind of excited about how this is continuing to evolve and provide data information for us, as well as allowing us to provide data and information for you. And of course, eventually that that research category will allow us to see what any particular time frame would produce over the course of a month. So Erin just said that these averages actually should be correct It's the win-loss category on a monthly basis that are not available for us yet. But so these averages should be correct. So that would say that 9:30 to noon, you know, regardless of what the highs and lows are, you average about 332 $332, or sorry, points, 332 points a day, and 600, almost 610 points a day, and 1,200 points uh, a month. I'm sorry, a month. I'm getting used to the month as opposed to the day. So that's pretty strong. You know, even in the 9:30 to noon category, 332.65 points over the course of a month is $6,653 on an average, and on a 12-month basis, that right there is producing just under an $80,000 a year income. So we'll have to see, you know, after a 12-month period what the true averages are, but I think it's a great additional piece of data. This one I always think is very strong. If you only like trading the trend and trend bias signals, 609.95 times 20 points, $12,200 a month and 12 months. That run rate right there, just looking at monthly averages, is about $146,000 a year, and that's only trading one contract. Then you factor in the personal trading plan, where we help you understand how to properly scale to a higher number of contracts, and now you start to understand how we're able to actually, in the trading plan, get to the values that we're seeing by scaling the number of contracts, starting only with $5,000. So that's it for the summary today. Sincerely appreciate all of your interest in trading and letting us have the privilege of helping you learn how to trade and support you every day. In closing here, my personal opinion is the tools that you need to be a successful trader are, first of all, some knowledge and education, which we can provide for you in futures and options education. But the most important tool you need is the adaptive entry system. This is the key to knowing when to get into a position and which direction the market or price of the stock or index is likely to move. Second most important tool is the personal trading plan, so that you can, at any given point in time, understand, if I continue to trade and achieve performance the way I have so far, what would my income be? That's a very comforting thing, in my opinion, for a trader, because at any point in time during the day, if you're trading trend bias, trend continuation, and you know that by earning 35, almost 36 points in a day, it's going to get you to that number. When you hit 35 or 36 points of profit for the day, you can quit. We have a lot of people in our live trading room that tell us early in the morning, sometimes before the first hour of the regular market session, that they're done for the day because they've hit their profit target. And they know that if they continue to hit that profit target, they have a reasonable expectation of what their income can be over the course of 12 months. So we've put all these tools together to help you understand how to build a personal trading business for yourself and to earn the level of income that you desire. Sincerely appreciate that we have the privilege of helping you. I appreciate Aaron and Michael and my team, and Dorothy, who does a lot of background work for us, but we're all here committed to helping you learn to trade and then trade to earn.